Hey, breathing again. Some gon' leave like trees in the wind. Well, y'all gon' see like B to begin. That BC days, y'all free to pretend. Hey, cap on the internet, rap, we ain't into that. Fact, I'ma interject crazy. Hey, whack, I'ma intercept that with the intellect. Chat, better give me that gravy. Hey, that mean chicken. Gotta blow that, get it back, never know the cause. Yakety yak, get it black in a few stacks. Never gon' lack any cobras, dog. Hey, I don't got a cross for the NBA. I seen Tobin, the all white promo vid. And if God be for me, I ain't got a mind who against me. Hey, shoot the shot like I'm Curry. Ooh, I don't cap for my pictures. Ooh, narrow way, but I'm sturdy. Yeah, I don't pass on the scriptures. Ayy, walk with him 4 seasons. Never going back is no reason. Devil trying to tag you, throw demons. I don't never lack, I'm pro defense. Double check y'all Twitter feeds. It's a whole lot of big cap, like a biz hat, no ministry. You're the waterfall like winter leaves. And if you don't got Christ in the middle with the bread like a centerpiece, you'll probably gotta retool. No sheep food, so hard for the inner peace. All cap like Captain America. Capsaicin and capture the area. Cap crunch, cap marvel.
Okay.
Sir, there's a GC right there, Cliff.
Go.
It's piers. They got concrete piers and wood piers.
Yes,
Got
sir.
the checklist. Let's check out the checklist. We
Yes.
got it for everything we need.
Yes, sir.
You forget some things sometimes.
Mm-hmm.
So this is going to outline, make sure you hit every single thing. What's the
Yeah.
foundation, plumbing, electric, painting,
Yeah.
flooring, everything. So you don't
Okay.
miss anything.
Okay.
You want to make sure you
Okay.
get all your checks.
Okay. Y'all want to introduce you guys to Cliff Hunter. Cliff is a world-renowned flipper. He actually flips. He's also a GC as well. He's a good contractor. When it comes to all of our renovations, all over the nation, you'll talk to this guy right here.
What's good, baby? It's your boy Dale. I'm back in the saddle again. Our motto is to buy, build. We already bought it already, so we already own it, free and clear. Refinance to long-term debt, cash flow. That is the motto. Cliff, man, is that a pretty strong motto, man? What do you think?
Man, the model is strong. Like, you're getting each piece of the invest, right?
What it do, y'all? It's your partner Dale back in the saddle again for another edition of Real Estate Friday Live. You may say, Dale, where is Cliff, man? Y'all, Cliff, man, be praying for Cliff. He's pretty sick, guys. So be praying for Cliff, but he'll be a lot better, guys. So it's just your man's in there, but it's all good. I still look better than you. It's all good. But if you could, guys, from the get-go, do me a favor, guys, like, share, and subscribe today, because today's topic is off the chain, guys, and it comes right on time. So if you could, if there's a little bell on whatever platform that you're looking at your partner on, click on it, so when you see it, we go live, it lets you know, and you can come kick it with me and Cliff, guys. So let's dive into this thing real quickly, guys, man. Typically, at times, guys, we go through the current market analysis, guys, but today's topic today, real quick before we dive into this thing, guys, is we're going to talk about the current market analysis, but we're going to talk about it from a different perspective, guys. Let's go through our topics real fast. Here's our topics, guys. Number one, crypto and blockchain. We're going to talk about that, guys, all right? We had a little discussion about it last week, but we're going a little bit deeper today, guys. Number two, tokenization of real estate. We're going to talk about that and players that's already doing that. The risk and regulations that come with this tokenization of real estate, guys. And lastly, how does all of this open up opportunities for investors like you and I? But guys, let's do something a little different, guys. The current market analysis. What we talk about today, guys, it is very simple. Something happened this week, y'all. Y'all, what happened? Man, the Fed chairman did something that Cliff and I have been talking about. Now, Cliff has been a little bit more bullish on this concerning the interest rates being lowered. I was suspect a little bit because of what the Chairman Powell was doing, from the Fed was doing. Cliff has said that if there was going to be some rate cuts. Let's see what actually happened, guys, because something happened that you may not have seen, right? From the Fed chairman. He made an announcement this week. Let's dive into it. Here we go. Let's get into it. Here we go.
Good afternoon.
Here we go. Here we go.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people.
Okay.
While the unemployment rate remains low, it has edged up. Job gains have slowed, and downside risks to employment have risen. At the same time, inflation has risen recently and remains somewhat elevated. In support of our goals, and in light of the shift in the balance of risks, today the Federal Open Market Committee decided to lower our policy interest rate by 1/4 percentage point. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments.
So from the get-go, guys, we're hearing that the Fed chairman, guys, what he has done, he has decided to do something that he has not been wanting to do for a period of time, which is what? Lower the interest rates, guys. Now, people are like, yeah, this makes total sense. This is fine. But this is, I think, 6 months too late. And him lowering it to 1/4 point, guys, there'll be virtually no movement in the market. No movement at all, period. This is something that Cliff has said that was going to happen, which is fine. I kind of agreed a little bit, after some counsel with him, but for him to say now he is lowering the interest rates 1/4 point, that's nothing. This is window dressing, in my opinion. So, will this uptick any type of mortgage applications? No, not at all. 1/4 point, guys, which is really 0.25% of 1%. That's nothing. So virtually he's saying, well, right now the rate is 6.75%, right? We're going to lower it down to 6.5%. How much movement is that going to bring somebody? Nothing. Not a damn thing at all, guys. This guy, in my opinion, is, as Trump calls him, too late Powell. He has been too late. This should have been done weeks ago, but he wasted everybody's time by being political, so much so that the last announcement, before the announcement, you actually have some dissension on the Fed board, guys. I made a prediction that he wouldn't make any cuts at all until maybe next year or of any at all, because I believe he was being too political when it comes to these Fed rates, guys. It's wounded a lot of individuals, you know what I'm saying? But also, guys, we're going to see in a second what's really going on, because what really kind of guides this thing, guys, is what they call the bond market. The bond market. We're going to dive into what the bond market is in a second, guys. To be honest with you, give me a sec here. Boom, here we go. Because of the fact that what's kind of really going on, guys, is this guy's just really, 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 really late. Right now, let's dive into, guys, real quickly on how his decisions have affected really what's really behind the lowering and hiring of rates. It's called the bond market, right? The bond market. So let's bring in our guys from a good friend of ours from Reventure app real quickly, guys. Let's bring them in real quickly. And let me go and remove this real quickly. And let's see what was actually going on and why he may have made this decision to lower these rates. So let's dive in this real quickly, guys, and then I get my commentary. Here we go. Let's get into it.
The Federal Reserve lost control of the bond market in America.
Huh?
They just cut interest rates 2 days ago, and after they cut interest rates, long-term bond yields and mortgage rates spiked.
What?
indicating that the bond market is not really paying any close attention to what the Federal Reserve is doing, and that we could be seeing skyrocketing borrowing costs into the future, even if the Fed decides to cut interest rates. This is something that could cause home prices to go down in the long run. It could cause stock prices to go down in the long run, and you guys need to know about it. So the first
Stop right there, guys. Okay, guys. Okay, I'm a strategy guy. Okay, I'm a strategy guy, and I try to look at things that people are not talking about that fit within the context of this discussion. Okay, so and a lot of people have said I have a talent for doing it. So thank the Lord, I give him all the glory. But let's dive into this. Okay, let me ask a question, and you may classify it as a conspiracy theory. Okay, whatever. Because he just said that even with the Fed lowering the rates, the bond market paid no attention to the movement, right? The bond market paid no attention to the movement. Now watch this. Why did this move trigger this non-response by the bond market? Why? And there's a he's saying that it may drive up borrowing costs, because something's spiked. Let's listen to him again real fast, guys, real fast, so we can make sure that we're not misinterpreting something. Here we go. Now watch it. Here we go. Let's get to it.
cut interest rates 2 days ago.
2 days ago.
And after they cut interest rates,
Yeah.
long-term bond yields and mortgage rates spiked, indicating that the bond market is not really paying any close attention to what the Federal Reserve is doing.
Long-term bond yields have spiked, indicating the bond market is paying no attention at all to anything that the Federal Reserve Chairman is doing. Nothing. They're paying no attention at all to this at all. Here's my conspiracy theory. Could this have been the plan the whole time? Hear me out. Could this have been the plan the whole time? What do you mean, Liddell? If we cannot lower the rates, even though the metrics that we as the Federal Reserve put in place, the economy has hit, could this have been the plan the whole time? So no matter what we do, as far as lowering the rates during this time frame, because we held out for so long, right? Could this, by us holding out for so long, even with us lowering the rates, could we get a repealing effect in the bond market to the point where they don't even care? Could this have been the plan the whole time? Think about it. Why? Again, this is just an assumption. I have no facts to prove this at all. Okay, just an assumption. What's a way for if a Federal Reserve or a Federal Reserve chairman is being political in their decision making, not based on my assumption, based on the track record, right? What's the best way to not be perceived as being political, but still get a reverse effect from the bond market, which is where the interest rates really count in anything that I do? You hold out for as long as you can, right? And then at the tail end, you begin to lower the rates, knowing that the bond market is going to ignore you potentially, right? And it may drive up the cost for borrowing, right? And spiking of bond yields. Could this have been the plan the whole time? Let's keep listening real fast, guys, right? And then we'll go into the counter move that the administration may be doing now. Again, here we go. Let's just dive to it.
And that we could be seeing skyrocketing borrowing costs into the future, even if the Fed decides to cut interest rates.
Wow.
This is something that could cause home prices to go down in the long run. It could cause stock prices to go down in the long run. And you guys need to know about it. So the first thing I want you all to understand, in case you missed the news, right?
Yeah, here we go.
The Fed cut interest rates for the first time in 9 months earlier this week.
Yeah.
So they did a 25% interest rate cut,
All right.
and they signaled more reductions were to come.
You see?
However, something very strange happened after this.
Watch.
After they cut rates,
look at this.
Mortgage rates proceeded to spike from 6.1% up to 6.35%. So there was a 20 basis point increase in mortgage rates after the Fed cut interest rates. And this is causing a lot of home.
So stop right there. So interest rates, when you cut rates, typically what happens in the right scenario, you cut rates from the Fed side, rates begin to come down. We just saw a chart of even with the rates being cut and promises of more cuts coming, the bond market went up 2 basis points. So you went down 1/4 point, right? So said the Fed chairman, but the rates went up 20 basis points. Do you see the reverse effect? Could this have been the plan the whole time? Could it? Again, this is just an assumption. I don't know this to be a fact. But whenever you have a Fed chairman and a Federal Reserve Bank, in my opinion, being very political in their decision making, and others' opinions as well, being very political in their decision making, could this have been the plan the whole time? Could it? Could it? Now, let's see exactly what the market is saying about this after the rate cut. Let's see what the market is saying about what's going on, guys. All right, let's see what's going on. Let's bring on, I think that her name is Danielle DiMartino Booth. She is a former Federal Reserve, I think, president, I believe, of Dallas, in the city of Dallas, right? So she's no slouch. She knows this very well. And notice, I want you to listen to what she actually says about potential candidates to take the place of Federal Reserve Chairman Powell, because this chairman is his term ends May of 2026, next year. So Trump has been very vocal about this, right? So let's see exactly what she says, guys. And I want you to listen to what she says, and then you're going to see a UBS managing director come on and talk about the investor market behind this. Listen to what they're not saying. Listen to what they're saying, but listen to what they're not saying at the exact same time, okay? Listen. Here we go. Let's get it in.
Their forecast for the Fed, which is confusing a whole lot of people. We're going to go back to panel in a moment. Questions getting a little redundant. It's a chance for us to bring back the panel. Danielle, just want to start with you. What's jumping out at you the most so far?
Well, what's jumping out is that Treasury Secretary Scott Bessent said that as soon as the Fed blackout ends, which is as of this meeting ending, that he was going to be interviewing Christopher Waller for the position of Fed chair. I think Christopher Waller just kissed the idea of being nominated to Fed chair goodbye. In his most recent speech, he was like, let's go, let's get on with these rate cuts. And yet his focus is on the core private sector, the jobs that are being created in the core private sector. That nets out healthcare and education, Charles. If you're looking at it through Waller's prism, the last time there were net jobs created in outside of healthcare and education in the private sector was April, meaning that Waller knows that they should have been cutting in May, June, July, and now in September, and he's denying that, which means I think he just kissed this job goodbye.
So right there, guys, again, she's talking about a potential replacement for the Federal Reserve Chairman Powell, and what he is saying concerning what's currently going on right now, right? And him admitting that rates should have been cut months ago. And what she's saying is because of his dialogue in the public, right, he's most likely kissed this job goodbye. Okay? So again, replacements for the Federal Reserve Chairman because of actions that should have been done months ago in cutting of rates. He is saying something that's contrary to that reality. And now you're hearing someone that's actually has worked for the Federal Reserve in Dallas, Ms. Booth here, right? She's saying this. Now watch. You heard that from a government standpoint. Now let's bring in the business, right? On the same show. Let's bring in the business and see what UBS says about this whole thing. Here we go.
Allie?
Look, so I'm going to keep the politics and the workings of the Fed to these lovely people. What I'm going to say is, from an investment perspective, I don't think this changes anything. In that, what do we know? We know earnings are strong and growing.
Okay.
We know that the dollar is weakening.
Okay.
We know that we are on a cutting path. We don't know the extent necessarily or how quickly, but what does all this do? It means you have to buy risk, and it means you still want to own things like gold that are dollar denominated.
So, yeah, we're on a cutting path, Jim, but.
So again, she's beginning to talk about, look at her prescription. She's saying that the dollar is weakening, right? Earnings are strong. The dollar's weakening, right? And notice what she's saying about ownership. She's saying you want to own things like gold. Now, for instance, what is gold? Gold is a hedge against what? Inflation, which is what? Rising cost. So what she's saying is what our friend said in the previous segment about when the Federal Reserve lowered it down 25 basis points, the rate went up 20 basis points, which means it got more expensive to borrow. Do you see why she prescribed ownership in things, right? As well as gold, because what? Those are inflation hedges. Do you see the strategy? This is someone from UBS. UBS, guys, this is not no slouch. This is UBS. Listen to what they're not saying. Listen to what they're saying, right? Listen to what they're saying. Listen to what they're saying, right? Listen to what they're saying, right? Now, guys, let's go a little bit different. Now, here's my question here. Right? I'll get this off the screen real quickly here, guys. Let's go into what I love to talk about. The counter move, guys. The counter move, guys. Real quickly. Could crypto flip the housing market? Right? Could this have been the counter move that the Trump administration had been talking about? Right? Now, I'm going to bring in a video. I'm bringing a video real quickly of someone talking about how this pivot could have changed everything because of maybe an inclination that the Federal Reserve may have gotten more political, right? Just hear me out. Hear me out, guys. Hear me out. Think outside of what you've been taught. All right? All right, guys? Let's bring him in real quickly and let's see what he has to say about this whole thing, guys. All right? Let's dive into this. Here we go.
The US housing market's about to go absolutely nuts. There's a brokerage called Christie's International. They have now created what's called a crypto real estate division, where they solely use cryptocurrency to buy and sell property. What? You have to realize this is a gigantic loophole that is going to completely change real estate, right? This hasn't been going on very long. They've sold over $250 million worth of real estate just using crypto. They've got another $1 billion worth of inventory that is available to people who want to buy and sell this real estate purely using cryptocurrency. You have to understand, when this happens now, if you look at legislation like what's happening in Texas, where they're trying to stop foreign investors, well, cryptocurrency is worldwide. That means an investor from any country around the world can buy and sell US real estate really quick and nice and easy. And there's almost complete anonymity, because all it takes is you set up a blind trust that owns an LLC that buys the property. Now the LLC has ownership of the home, and the owner of the LLC is protected through that blind trust. So if buying real estate through crypto becomes more mainstream, which it will do, 6 months, a year down the line, you could start to see the US housing market being flooded with people from outside of the US, and that house prices will start pumping back up again. There could be inventory issues. There's lots of problems that this can create, and it may make it even more difficult for the average home buyer to then buy a house in 2 years, 3 years, 4 years, 5 years. So buying a home right now with all of these new buyers that may potentially flood the market may still be one of the smartest decisions that someone could make.
Guys, did you just hear what this young man actually just said? Could crypto had been the counter move that the Trump administration was planning for when they passed the Stable Act, the Genius Act? Okay, if you don't believe me, guys, go look at past counter move podcasts on this platform and look at what the Stable Act is and the Genius Act is. These were just passed. It essentially married cryptocurrency with the federal government, right? Because in the past, cryptocurrency and the federal government were always at odds because cryptocurrency was decentralized, which means no government control. Cryptocurrency is just digital money. It's all it is. That's all it is. Digital money. It's all it is, right? So now what's happening with the passing of the stable coin and the Genius Act, what it's done is it has effectively married the decentralized cryptocurrency blockchain with the federal government. In other words, the Trump administration has basically mimicked the Federal Reserve banking system through the cryptocurrency system. Let me prove to you. On the Federal Reserve side, you have the Federal Reserve, the bank, who floods money to the banks, right? And then the banks then lend that money out to you guys. Real simple picture, right? On the cryptocurrency side, which is now married with the federal government, it's the same thing. Now, they created two funds or reserves. Hello. And those reserves are flowed with those coins, with cryptocurrency flowing. They're not creating new coins. These are existing coins already that they actually own. The banks are making their own internal coins, and the federal government is saying is we are backing these coins because you guys are going to leverage our cryptocurrency, right? We're going to leverage cryptocurrency to create new debt. So there's no printing. That's just leveraging cryptocurrency to create new debt through the banking system, which allows for the bank to not only use the Federal Reserve side to create debt, they can also do the exact same thing on the cryptocurrency side. You just heard companies doing this already. They're already doing this already, guys. They're doing this already. So now what's happening is, could this have been the counter move that the Trump administration was looking at, right, to do this? Now get this. The current Secretary of Commerce, Ludwig, right? He's a cryptocurrency godfather. So Secretary of Treasury. It fits within their lane already. So now you have the Secretary of Treasury, the Secretary of Commerce, who have a background in being godfathers in the cryptocurrency space, now running the entire Federal Reserve side and the cryptocurrency side for the nation. Could they have seen this coming? My answer to that question is yes. That's why they pushed so hard for the Stable Act and the Genius Act to be passed. You don't believe it? Look it up. Look it up. Look it up, guys. Look it up. Now, you may say, Dale, is this going on in real life? I'm glad you actually asked that question, guys. Let's bring them in, guys. Here is a company already using cryptocurrency to what? Fund mortgages. What you say, Dale? Yes, sir. Let's dive into it for the folk in the back. Well, here we go. Let's get it in.
Welcome back. Blockchain lending company Figure Technology making a blockbuster debut last week on the NASDAQ. Take a look. The stock surged better than 40% on day one with a valuation above $7 billion. This IPO raised nearly $800 million right out of the gate, with investors betting on the company's rapid growth and profits. Wow. It's part of a recent wave of crypto IPOs driving lots of optimism on Wall Street. Joining me right now is the...
Stop right there. Let's read it. Blockchain native capital marketplace. Gotcha. First, SEC, right here, regulated stablecoin. First. And I want you to pay attention to SEC. That stands for Securities and Exchange Commission. That means the government. Lending, trading, and investing in consumer credit. Hello. What is a mortgage? It's consumer credit. And digital assets. You must say, Dale, come on, Dale. First word, lending. Lending. Hello. McFly. Hello. This ain't nothing new, guys. They just raised over $1 billion on the NASDAQ. You just heard it. And the SEC said, we bless it. Let's keep going, guys. Let's keep going. We ain't done, y'all. We ain't done. Let's get going. Here we go.
Co-founder and executive chairman of Figure, Mike Cagney, with me. Mike, congratulations to you on that stellar debut. Wow. How are you feeling this morning?
I feel like we've got a lot of work ahead of us.
Hey.
Tell me about the business model. Where do you see the work and the growth ahead?
Sure. So what we're doing is using blockchain to change how capital markets work. And blockchain has this incredible power that it allows you to create native digital assets where I know for certain the ownership, the composition, the history of that asset. And that changes how we can transact with that asset, how marketplaces work, how we can lend against that asset, how we can perfect collateral. And if you think about the application to financial markets, our financial markets are trust-based markets, and blockchain really displaces trust with truth. A common example, when we trade stock, there's 7 parties that sit in between a buyer and seller, and blockchain can distill that down to just buyer and seller. When we swipe a debit card, there's 5 parties in between that transaction. Blockchain can bring that down to 2.
Wow.
And the companies that you're disintermediating represent trillions of dollars of market capitalization.
Wow.
So it's an enormous opportunity.
It sure is, and you've argued.
Did you guys just hear what that man said? He went through transactions with stocks, right? He broke it down to the players involved in these transactions, how it cuts costs, and he said it opens up over $1 trillion of market capitalization. That means more money, more money, more money. Yes, sir. Yes, sir. Get on your job, baby. He talking about more money, more money, more money. That's what he's talking about, guys. Yes, sir. Do you see what's going on? And he talked about leverage. That means lending. Lending. This is the first stablecoin that has actually went public on the NASDAQ. There's more to come. There's more to come. Now, Dale, you may say, Dale, is someone really, Dale, are they really lending on real estate? Are they really doing this? You know what? I'm actually glad you asked, guys. I'm glad you asked. All right? I'm glad you asked real quickly. 1 second. Let's go over here. Did I bring it? Yep. Here we go. Here is, are people really buying crypto? Are people really buying real estate with cryptocurrency? I'm glad you actually asked, y'all. You know, I like to bring receipts, receipts, so people can see what's going on. I'm not making some stuff up, guys. This is CNBC. CNBC, y'all. They actually had a little report. Let's check it out. Here we go. Let's check.
Paying with Bitcoin is still not really very common, but that's one reason real estate is starting to get in on the crypto action. Buying a house with Bitcoin?
What you say?
Here's CNBC's Diana Olick.
This Manhattan Beach, California home recently sold for Bitcoin.
What?
One of a growing number of mostly high-end properties now being listed and purchased in cryptocurrency.
What?
I would say we're just at the beginning.
We met real estate agent and crypto expert Tony Giordano 3 years ago when he listed this massive Malibu home for sale in Bitcoin. It ended up selling in dollars, but that was then.
What's happened since that last is it's become more popular, where people are asking more often, how do I go about buying a home using Bitcoin or cryptocurrency as the form of currency for buying real estate?
Which is why his company now has a crypto management division designed to help agents and consumers through the process.
What?
And he shared some advice with us. First, you'll need to find a real estate agent who knows how to work with Bitcoin, someone who's already facilitated a transaction. If you're a buyer or a seller, paid-off properties with no mortgage make the transaction much easier. You'll also need a crypto real estate attorney, someone who specializes in the paperwork and liability aspects.
Correct.
And finally, you'll need a third-party escrow. That is, a Bitcoin mover who can both transfer and hold the token.
Wow.
I've been accepting Bitcoin since 2013.
Wow.
When I owned and managed coffee shops up here in upstate New York.
Yes.
Which is why Paul Padarakis decided to list his Troy, New York home for both Bitcoin and dollars.
I just put it up in January as a Bitcoin listing, and then a few days later I did have an offer in US dollars, so that was pending. So I did not see what Bitcoin could offer.
And that may be the biggest issue for Bitcoin in today's ultra-competitive real estate market. Demand is so high that sellers are likely to get multiple offers in dollars before Bitcoin ever enters the picture. That said, on the ultra-high end, where competition is less and international buyers play, a listing in Bitcoin will garner more attention and more buzz about the property and could ultimately lead to a faster sale.
Stop right there. So, guys, I want you to pay attention to. You see real estate being bought by crypto, but notice the political end to this as well, guys. Remember, you have a lot of states like Texas outlawing other countries from buying land in the United States, which I like to play. But as the Instagram video that we played in the previous segment talked about, this is a loophole because a country can invest money into a fund. The fund can then orchestrate an LLC. The LLC can then buy the said property or said land, right? Hello. All through Bitcoin. So now you actually have a potentially enemy of the United States buying land in the United States using the vehicle of cryptocurrency. Because it's anonymous. Do you see the play? Could this flip the housing market? Yes. Could it be harmful? Yes. Yes, it could. Yes, it could. Because it could open the door to enemies of the United States politically owning land in the U.S. Now, does that make sense, guys? All right. Now let's keep it going, guys. Now, Dale, I see people actually buying real estate. You know what? That's cool. Is anybody? I've seen companies go public, no problem with it at all, have intention of doing it. Is there any companies at all, Adele, or they at all lending actively on purchases of real estate? Lending. I'm glad you asked that question. I'm so glad you did. Let's go back over to our friends over at CNBC. Again, CNBC, you know, CNBC. And let's talk about it is happening. Here we go. Let's get into it.
Crypto conversation. Price of Bitcoin this morning got very close to 100,000. Join us now, Andrew Hones, New Market Capital founder and CEO. And today, New Market is announcing Battery Finance. It's a Bitcoin-focused asset management platform that combines cryptocurrency and other assets. I won't say real assets because that sounds funny, doesn't it? It's like, something other than Bitcoin, like a real asset.
Tangible. How about
tangible. Let's call it tangible. And the first, you've got to explain this to us. The first time you're combining Bitcoin to actually make maybe loans, which, why don't you explain it? Because it takes some of the problem that you normally have with lending, which is inflation, I guess, and it could actually lessen the risk and volatility for fiduciaries running pension plans.
I'm going to answer the question in a second.
Hard to believe Bitcoin could be a solution to pension fund management.
That's what we're thinking. Well, good morning, Joe, Becky, Andrew. I'm so pleased to be here. And I'm really excited to announce today on Squawk Box this loan that we've just completed. We combined a seasoned multifamily asset in Philadelphia, about 50 meters away from the First Bank of the United States, the one that Alexander Hamilton started. We combined that asset with around 20 Bitcoin.
Wow.
And we provided a loan to refinance the existing mortgage on the property, to provide the asset sponsor some funding for capital improvements, and with the remainder to buy the 20 Bitcoin.
Okay, we got to go backwards.
Go ahead.
You got to go backwards.
Hold on. Wait a minute. You heard a lot of lending going on in that dissertation by the Newark Capital CEO. So the answer to the question, are they actively lending money with Bitcoin? Don't take my word for it. You heard it from the CEO right here on CNBC. The answer is yes. Do you see why Wall Street is happy about the Stable Act, the Genius Act, give them access to additional capital via cryptocurrency? Because it shakes hands with the government. So to answer Stevenson's question real quickly here, So is this a sign to keep buying, right, as much Bitcoin as possible? Yes. Yes. Why do I say this, Stevenson? We saw in a previous segment that with the Fed Reserve lowering the rates 25 basis points, what did the bond market do? It went up 20 basis points, which means higher borrowing interest for the consumer, which means higher prices. Now, does that mean that the price points for real estate won't come down? I believe it will come down because there's not a lot of movement in the market. Okay, there's not a lot of movement in the market. So therefore, if there's not a lot of movement in the market from a buying perspective, right? Because this is a buyer's market, what has happened? The sellers have to get out of la la land and begin to lower their price points. They got to do it. So will the price points come down? Yes. So why should I buy more Bitcoin? Simple. It's an asset for you to leverage. Look at it like real estate, stocks. You can leverage it. It's generating a value, right? Like real estate, like stocks, right? So that if you need to leverage, it's added to your balance sheet, right? So if you need to leverage that asset, why not use it? Like stocks, bonds, mutual funds, real estate. It's an asset on your balance sheet. Make sense? Oh yeah. Also, guys, Stevenson as well. There's actually banks right now that would actually lend you 50 to 60% of the value of your Bitcoin right now. Literal banks. I've talked with them on the phone. I have. It's real. This is real, guys. This is real. Look at the smile. He happy. Look at him. He happy in the mud. Look at him. Happy in the mud. Yeah, we made music created dead out of thin air. Sure did. He happy in the mud. Look at him. I would too. I'd be happy, joy. He talking about, yeah. He talking about to bounce back. Yeah. You see that smile? You see that smile, baby? Because the Fed cut them rates. So did. He did cut them rates, and the bond market said we'll give them none of that because this is all for show. We're gonna bounce back up 20% basis points. There it is. Make sense, guys? You on the same page? This is fun. This is fun. Now, guys, guess who, guys? Lastly, and we ending, y'all. I hope this has been eventful. I hope this has been eventful. If you're getting mad, hey, I'm so sorry for you. I don't mean to be facetious about it. I'm just trying to educate. You know what? Remember we talking about Wall Street guys. Wall Street guys. Wall Street. 1 second. Make sure we got it. Gotcha. Here you go. Wall Street guys. And then I'm gonna get over to your counter move. I got you. Don't you worry about it. Guess who's pretty active right now in buying real estate? Guess who? Remember we talking about Bitcoin and blockchain and real estate and Wall Street. Guess who's pretty active? Who's pretty active in the marketplace right now? They ain't sitting on the sidelines. Who is it, y'all? Oh, our old buddies. Don't you worry. I'm gonna let this tell you. Here you go. Let's see what it says.
Blackstone is an American financial giant with over $1 trillion.
Blackstone. 1.2 trillion with a T. AUM, or assets under management. Let's see how active they are. Let's go.
And assets under management.
What we do is we buy assets, say we buy a company, and we make them better.
Real estate is one of Blackstone's major divisions.
Why would Blackstone be in the real estate business? I'm glad you asked, because it says it's one of its major areas. 33% in insurance, 31.8% in private equity, 27.4% in real estate. Let's see what's going on.
Blackstone is really in the business of marketing investment products. A byproduct of that is they became a very large landlord.
The company has an ownership interest in at least 274,000 rental housing units.
Look at that. Look at those units, guys. Look at the units. Look at this. U.S. apartment units owned in 2025. That's this year. This year, right? $122,000. 122,000 units. Greystar. MAA, that's an apartment complex. They have a lot of those in Dallas. 104,000 units. Morgan Properties, 96,000 units. Avalon Bay Communities, 94,000 units. Equity Residential, residential, right? 84,000. Look at this. Those are the U.S. This is right here, guys. This is, forgive me, I'm sorry. These are the other competitors here. They're saying Blackstone, if you add up all, guys, watch this. I'm gonna add this up, y'all. I got my calculator. Don't you worry about it. I got my calculator. I got you. Don't you worry about it. So you got 104 for Greystone. I'm sorry, 122 for Greystone. All right, 122 for Greystone. 104 for MA. All right, you have 96,000 for Morgan, 94,000 for Avalon Bay, and 84,000 for Equity. Watch this, guys. That's 500,000 units, right? Blackstone owns 274,000. That's more than half. One company. But Dale, the market is stagnant. Yep, it is stagnant. But these guys are active. Let's keep going, y'all. Let's keep going.
That likely makes it one of the largest landlords in the United States.
In every market where we operate, we own less than 1% of the housing available.
Their portfolio of rental housing is concentrated in Sunbelt regions like Texas, Georgia, and Florida.
Wow.
Many of these units are apartments. A smaller portion are single-family homes. The company also has stakes in mobile home parks, student housing, and more.
I have to give them credit because they went after like apartment housing.
Look at all the real estate they actually own. Look at the portfolio of multifamily, single-family resident rentals. And I'm going to that in a second. Mobile homes, very good investment. Student housing, extremely good investment.
And sort of residential housing, as opposed to going into malls or retail side of the business, which has really just struggled.
Rents keep rising in many parts of the U.S., particularly major cities that aren't building enough housing.
Wow.
As a result, some cities are considering policies that protect tenants from rent hikes. If these measures pass, they could affect Blackstone's bottom line.
I just think that it's time for the landlords to accept that they can't always make as much as they would like.
Trash.
So, how did Blackstone become one of the largest landlords in the United States?
So that's that right there, guys. We're not going to play that whole thing, guys. But I implore you guys to just look up why Blackstone is buying homes in the U.S. again and go listen to the entire thing. Very educational. Very educational. And they tell you why. Now, why did I bring that up? Well, simple. In a area to where the market is stagnant, the power brokers are moving. They're moving. They are moving for real. So if that's the case, what should you be doing? This is what we call the investor playbook. What this pivot and housing flip means for real estate? We call this the I'm about to bounce back. I'm about to bounce back. This is what we call the bounce back. Right? The bounce back area. So with the market being as stagnant as it is, prices are going to come down. Right? Because rates are going up. So if rates are going up a little bit based on the bond market, right? We heard that before in the previous segment. In this episode, go back and listen to it if you need to. It forces sellers to have to bring down their price, but I'm seeing it here locally in Dallas and nationwide, right? That's making it a buyer's market, which means deals have to be made. You're seeing anywhere from 5 to 7% concessions being made by sellers just to sell their homes. What is a concession? A concession is a seller having to give up something at the close, which costs them money, to satisfy a buyer to get them to buy said asset. Right? That's called a concession. That's what's going on here. So how does that benefit you? That means as a investor and or buyer of your retail space, right? A homestead, become more aggressive in your approach. Become more aggressive, which means that there's a saying that Robert Kiyosaki says, and I've read almost every book by Robert Kiyosaki. Love him, great. I met him in person. He's something in person. Very wise, right? He owns, I think, 12,000 units. I'm saying it again. He owns 12,000 units. It's a lot of units, guys. Now, begin making offers on properties that may make you look crazy. If you don't feel embarrassed with your offer, it's not low enough. Let me say it again. If you don't feel embarrassed by your offer, it's not low enough. This is the market for this. It is. There's a reason why a large number of realtors have left the space. It's because the veracity of closings are down significantly. Make sense, guys? So if you are a retail buyer, just become more aggressive. If you're an investor, you need to master the art of locating distressed properties. Now, Dale, what is a distressed property? I'm gonna give you an example and write this down. Someone that's behind on mortgage payments. A vacant home. A home that has high grass, a fence messed up, a burned down unit, painting issues, boards on the windows, right? Again, vacant homes, someone that's not there. And these are if you have a trained eye what that is, you can look at these properties in any subdivision. Because I've driven subdivisions, whether it be micro affluent, and also a little bit more poorer. You'll be alarmed at how many properties are vacant. I was driving here locally, and I was driving here locally in just the neighborhoods, and I saw a home. It was probably about 3,500 square feet in Plano, Texas. Very affluent area. The house was vacant. How do I know? I know how vacant house looks like. It's vacant. I drove by it twice just to make sure I wasn't going crazy. Yes, it was vacant. There was no for sale sign in front of it. No boards on the house. But you could see, just by looking in the windows, there was no furniture in there. There was notices on the windows. That's one big sign of a vacant home. Yes, you're going to have to begin to understand how to locate distressed properties. Distressed properties, guys. As an investor, if you master this craft, if you master it, you will always have access to properties. Get this, guys. Get this. You hear a lot of times from politicians, specifically in the previous administration, we need to build more homes. And there's some truth there. But you can only build so much. Guys, did you understand that I think there's anywhere from 4 to 5 million homes vacant? I'll say it again. Nationwide. I believe it was 4 to 5 million homes are vacant. So, because you keep hearing, we got to build 3 million homes, 3 million homes. So, if you just fill those 4 to 5 million homes, you have met the 3 million home gap there, right? Plus 2 million more. Do you see the opportunity you have in front of yourself right now? What if you could master the art of locating distressed properties in any city, county, or state? Get this. What if you could actually get a list of distressed properties from your city now for free? What would you do with that information? What would you do? What if you actually can get some counsel for free on how to locate these distressed properties and what to look for to know that the property is distressed? This is the reason why Cliff and I offer a free ebook. It is completely free, called Distressed Property Investing. It's an ebook. How do you get access to it? Simple. Scan on the QR code on the screen. Number 2, you can also direct message me the word real estate and my team today. Get you out this link and go download it. It's right there. And as a bonus, if you're wanting for someone to walk you through it step by step, we actually have a video you can actually go have access to, and we'll walk you through the exact same ebook step by step right there. Just by you see on a QR code. Or if you want to click on the link below in the show notes, it's down there too. It's right there, guys. And it's for free. What you waiting on? Jesus? What you waiting on, y'all? The Holy Spirit? It's right there. Go get it. And it's free. Anyways, guys, man, thank you so much for that. This was fun to actually go through, guys. Also, I always get asked this. Guys, every Thursday at 8:30 p.m., right? I have a podcast called The Counter Move Podcast. And your partner, I host it. Guys. Here is a brief preview of what we're talking about. Here we go.
Why they party? I'm in here grinding. Money I'm stacking. Why they rock diamonds? I can't relate to them, ain't much in common. I set a goal for me 2 or 3 commas. 7 figures, 8 figures to 9 figures. On a slow pace to get rich quick. Same time we just think different. Cause when you make it, it hit different.
Guys, that's the Counter Move Podcast every Thursday at 8:30 p.m. CST. Now, I got to be transparent. Yesterday, I was tied up with some business, so I will be doing a Counter Move Podcast tomorrow in the afternoon, guys. Probably around about 1 or 2 o'clock in the afternoon. Actually, I'm sorry, forgive me. It'll be Sunday, because tomorrow I'll be at a summit with my good friend IJ. He has a summit called the Land Summit. Phenomenal training place, man. If you're in Dallas, man, if you can get there, man, go there tomorrow. Now you got to pay to get in. You got to support my man's in there. But if you want to learn about land investing, man, go see my partner AJ. Look him up, AJAA. I'm sorry, AJAY. Forgive me, AJ. AJAY. Look him up, guys. He's on Instagram, guys. He's right there. Look him up. If you want to learn how to invest in land, that's my man's name. Go holler at him, guys. But guys, thank you so much for your time. God bless you. You know I end it every single time, guys. And be praying for Cliff because he's a little sick. Before you leave, baby, what you can. You see that thing, baby. Take the picture for your mom and holler at your partner. God bless you guys. Have a phenomenal weekend, guys. God bless you guys. See you next week. Peace.
Okay, so you did fixes and flips first, or were they? Now it sounds like you're more buy and hold. Okay, so you're wholesaling first. Okay,
because I was broke. I had no credit. I had no money. So I had to get some money coming in. So I learned how to do wholesale.
And you were doing wholesaling at the good time too.
2000.
When it wasn't so saturated. I
kind of saw the debacle coming. Okay, it didn't make any sense. I was like, wait a minute, how can you lend out to retail buyers 99.7%?
Yeah,
just a little bit of a down tick. It's insolvent.
And you got to remember, in some states, because I lived in Florida at the time, you could have loan to value above 100% of your property.
Right.
The first property that I bought, it was 110%. We left the bank with like $30,000.
Yes.
Yeah.
Yes.
It was amazing to me. I was like, why am I not doing this all the time? But then clearly 08, 09 let me know why people shouldn't have been doing that all the time.
08, 09, that's why I made a lot lion's share of my money.
Wow,
People
okay.
were actually running from the cows. I was running to it.
Of course.
Because I saw it was coming.
Okay.
A lot of my business colleagues back then were buying flippers.
Yeah.
I didn't think it was wise for me to share 50% of my profit with Uncle Sam. He didn't do no work.
Okay.
So why would I give him free money?
Of course.
Okay, how can I make sure I'm still legal, but keep the lion's share of the cash flow?
Of course.
So I began studying the tax code with my accountants and CPAs, and I said, okay, I'm going to buy a whole lot of properties. Now watch this. I actually buy a lot of properties. And I take home money when I actually acquire it every single time.
Okay, you need to break that down just a little bit.
If you wanted to know how successful real estate investors make money when they acquire real estate and not when they sell it, click on the link below or swipe up and download our free ebook, Distressed Property Investing. The blueprint is in the ebook. Stay blessed, holler at your partner, and download the ebook today.
Bless God, give thanks. Bless God, give thanks. Bless God, give thanks. Bless God, give thanks. Big God, big grace.